Vi ska gå vidare i vårt program. Vi lämnar hälsoområdet och kliver tillbaka till teknikområdet. Vi har ett svenskt biometriföretag som heter Fingerprint med oss. Deras vd Adam Philpott, han är inte på plats utan med online. Hi Adam, I just made a brief introduction to your company and warm welcome, and you can start your presentation. Thank you.
Thank you very much indeed. Great to be here with all of you. Just as a quick introduction, my name is Adam Philpott. I joined Fingerprint Cards as the CEO in September in 2023. My background is in cybersecurity, many years in private equity as well, driving a lot of change and business transformation. So let me talk quickly about who Fingerprint Cards are. Many of you probably have heard of us, but a huge leading biometric component provider historically, became famous for selling mobile sensors, fingerprint sensors to unlock mobile devices, really hit the big time back in 2015, and from there expanded into other areas as a company as well. But I speak to many customers, and the things that customers really value about us is not only the products that we've been able to create, but actually the team that we have that creates them. We engage very closely with our customers to develop products, to support products as well, and we have a great reputation as a result for best-in-class products across a number of different modalities and in a number of different markets. But let me talk a little bit about the transformation. I mentioned I joined to transform the company. Whilst mobile has made Fingerprints a very successful company in the past, the market is commoditized. So what made us very successful was then starting to hurt us because the margins were declining. And I'll talk about that in just a second. So I joined in September, and in October, I announced our transformation plan. And you can see the transformation plan on the left here, to refresh our portfolio, to move away from mobile, which was costing us money, to focus on the core portfolio that we have and look expanding beyond that core portfolio. As we did that, it was necessary to optimize our costs, to put our costs at the right level so that we're running a profitable business, to strengthen our balance sheet so that we're not servicing debt with our capital, but using our capital to drive innovation and R&D and future growth. So look at our strategy. Where are we going? The market is evolved, both biometrics and identity. So to talk about where we're going as a company, how we're going to evolve in this market and continue to solve problems and eradicate passwords. To do that, it was necessary to bring in place a new leadership team, some top talent who's used to driving change, who can take us into some new spaces and frankly has some fresh energy to bring transformation to our company. And then finally, to execute all of this, it's really important that you align incentives, how people are paid, but also governance, how we're monitoring the execution of this plan so that we can change as it hits reality. So that was the transformation plan I announced back in Q4 last year. We began executing that transformation plan, and we are continuing to execute it. And the first phase of this is about stability, ensuring we have the right business metrics in place. We're driving profitability, we're driving free cash flow so that we can continue to invest and grow as a company. And our recent rights issue is very much part of that. And then as we go through that, we start gearing now for growth, looking at how we expand into new areas, but also looking at how we drive growth with the market potential that we see in our core areas as well. So that's very much what the transformation plan is all about. I get a lot of questions about mobile because the company was so famous for mobile. If you go to the next slide, thank you. I get a lot of questions on mobile. We were very famous for it, and so people ask why we're getting out of it. Well, here's the reality. Revenue is vanity and profit is sanity. We focus too much on revenue in the past at the expense of margins. So what we've really done since I've joined is really focus the business on where we're making good margin, not just on the commoditized spaces that we've been in. So not only has the margin been poor, and you can see the ASP has come down year after year after year, but also it's pulled down the overall company margin to untenable levels. What we've done is focus on our core business, and I'll share that in a second. And so it's not only the margin challenges that mobile presented because it's a very commoditized space, it's also very China-centric. So most of those companies, with the exception of Apple, are in China. And therefore, it's subject to geopolitics and uncertainty that we face in the world today, with many major elections taking place this year and next. Geopolitics continues to be very uncertain and create risk for a business. It's a very commoditized space as well. Lots of players in there, very, very low margins, and capital intensive because it's a hardware business, super capital intensive, and therefore you either need huge volumes or you need to be able to drive a premium. And in a commoditized market, that's challenging. Not only that, but it also took a lot of our focus because it was a big, attractive revenue number, absolutely not a profit number. There was a lot of attention on it. So as a business, it allows us to really move our focus away from that and now focus on our very, very strong core business. So let's take a look at what that core business is. Outside of mobile, PC is a strong market that we're in. Putting fingerprint sensors on PCs, it takes time to get into these customers. We have 4 of the world's 5 top window customers as customers of ours. That's not easy. That's a customer list anyone would be envious of. And you can see the customers that we have there. The 5th one is HP, a company that we're seeking to partner with as well. And so we have really strong partnerships with these customers. They really value our team. They value the support we offer them as well. And they really value the product innovation that we bring with an agile company such as ourselves. But there's upside. We can grow our market share in these companies. We're largely in the consumer devices, so there's an opportunity to then move in to the commercial or corporate devices too. So lots of upside to explore there with already good margin, very different margin profile because of the criticality of these devices. Access is another market we're in. 2 areas in access. It's quite a lumpy business, very different to PC in that it's highly fragmented. But access has got a couple of different segments. One is physical access, so door handles, key cards, that kind of thing, or even physical access on other objects like we recently announced e-scooters using fingerprints instead of mobile phones. So really simplifying how we engage with different devices. So there's physical access, and then there's logical access. How I use devices with biometric identity, like dongles or cards, to access applications, data, and other digital assets. Also, that's a huge growth market. So we're seeing a lot of growth in the FIDO space. That's logical access right now. But because the broader market is fragmented, think how many e-scooter companies there are. We're using a channel product that we'll be launching to get out there with our partners to give them the tools they need to go out and engage with different customers at scale and embed fingerprint capabilities into many, many different products. So a few different options and angles to drive growth in access. And then payment. Payment is a market that's nascent. We've spent the last few years building an ecosystem, working with ecosystem players to build out a product that we can sell to market. So a product where instead of having a PIN code on your card, you have a biometric fingerprint on your card. Improves security, makes it easier to use, but a lot of work has gone into creating best-in-class products. We've done that now. So we have a product that's ready for mass market. So now our attention is in working with banks, working with our partners, with their customers to drive adoption. We had a really good example earlier this year. BBVA Garanti Bank in Turkey recently launched biometric payment cards with our biometric technology on board. Not only was that great to see a bank launching, we've done about 11 launches so far, but the success of that launch has been incredible. You can go find it on LinkedIn, on Twitter, on the internet. They've been really successful and are now ordering more and more of these products because they're seeing demand far beyond that which they earlier anticipated. So we can see a lot more of that starting to happen as we see this market take off. And then there's some other areas we're in. We're in Iris, for example, very focused in automotive with that technology, very high efficacy, very easy to use technology there. And because we have so many patents as a company, so 700 patents, there's opportunities that we found to monetize those patents too. We recently announced a global company who's leveraging our content management technology, and there's other companies who are also seeking to do the same. So lots of opportunities for other monetization revenue streams also. And so that's a bit about our core business. As we keep moving, I also want to talk a little bit about how we are changing the balance sheet. What are we doing to improve the engine that drives the business, and how does the rights issue we've recently announced fit into that? Well, firstly, part of what we're doing is cost optimization. So that's a core part of the transformation plan I spoke about just a moment ago, making sure the cost is right-sized, not only from a talent perspective, but also from a non-full-time equivalent perspective. So just really bringing that down to be a very agile, very flat and agile organization, more of a startup style organization. And then also working on the balance sheet to look at our cost of capital, to rebalance how we're funded, moving from debt to equity, having more agility, but also having the right instruments in our balance sheet so that it's a level playing field for all of our shareholders, which hasn't necessarily been the case in the past, using some of the best partners that we have supporting us financially. Let's keep moving, and I want to just talk a little bit about strategy before I talk about the team. So we've got a great core business. We've moved out of a business that was not profitable. That allows us to focus a lot more on this really strong, higher margin core business. But it's not just about doing that. There are other opportunities for us to explore in the biometrics and identity space that we will also start to put capital towards. Great that if we can drive more growth in our core markets, which we'll do, but I also want to have more bets that give us future income also, and we'll put capital towards that. And as I think about that, the problem that we're trying to solve isn't just having the best biometric modalities. We're good at that, and we have that today, but that's not going to change the world. The challenge our customers have is how do they easily use that so they can finally get rid of passwords? And that's what we'll be focused on, looking at leveraging our modalities, bringing in additional modalities, but also bringing in identity data, really important aspects of identity today. Bringing all of those things together and ingesting them in a platform that our customers can use to displace passwords and use biometrics as an alternative in their infrastructure. So that's where we're going to be going as a company. It's a huge market. It leverages what we're great at and what we've already got good growth in, but also takes us into new areas, particularly software-defined areas too. And so in order to do this, it's important to have the right team in place. That's another aspect of the transformation plan I shared earlier. You can see some of the new team members. Christian is chairman of the board. He was appointed in 2022 to bring about this change agenda. And what he had to do was then bring in new talent to help him with that. Christian appointed me first to the board and then asked me to move into the CEO seat, which I did. And then I thought about bringing in the right team, a team who's focused on performance. A team who's seasoned in driving change and driving transformation, a team who's got the experience to be able to take us forward, both in the existing markets and into new markets as well. And these are some of those members who have joined me to do so. And so finally, just to conclude, the transformation plan is about winding down mobile, getting rid of the cash burn to focus on more profitable markets. Looking at cost optimization so that we are really using our capital in a very smart way and actually have more of a startup approach to how we're running the business in a more agile manner. It's also about focusing. It was a distraction to focus on areas that aren't profitable. I want the whole energy of the company focused on those areas that are profitable, give them more attention, drive more growth, be more creative in them. And I think we can yield even better results there too. But then not just staying there. It's not just about reducing into an area. I think we can focus and expand that area, but we can also move beyond it with some of the problems that our customers need us to go and solve for them. And then to do all of this is about bringing it together with a strong leadership team, with strong discipline and strong governance, so that this business is highly profitable and generating cash to allow us to continue to invest in future development. So that's what the transformation plan is all about. with that, I'm conscious I've taken about 15 minutes. I'd like to pause now, and perhaps we can go to some Q&A.
Thank you very much, Adam. Sure, we start off. I mean, you have gone to your shareholders and you announced the rights issue, the second one in quite short term. What will you use that proceeds for?
Yeah, thank you. Good question. It's very much about driving the transformation plan. So the proceeds are about restructuring the balance sheet. As I mentioned, there's a convertible instrument we're going to remove from that, level the playing field for all of our shareholders, but also shift the balance sheet from debt to equity. So that's a really powerful part of it, to then fuel the focus on the core markets that we have and allow us to expand into some new markets also. So that's really what the funding is all about. Of course, to do all of those things, we need to be fiscally responsible. So we're ensuring an aggressive cost optimization program with the right talent and organization in order to drive the execution. So it's about funding that, but driving good discipline in order to execute it and ensure this company is profitable and generating free cash in the near term.
Okay, so that share issue, will that take you to a positive cash flow? Or do you think you need another?
That's exactly right. It will take us to a positive cash flow. You'll see over the next few earnings calls as we drive cost out of the business. So you'll see that. You'll see a change in the margin profile. Now, this won't happen overnight, right? Taking cost out of a business takes time. It takes time to wind down the mobile business. So what we're really aiming for is by the end of this year to be in a very strong position. You'll see OPEX come down to annualized 150 million SEK. You'll see those other indicators around gross margin improve, a number of different things that you'll see over that time.
Another question on your transformation plan. I mean, obviously you're in the middle of it, and how far have you actually come in the transformation of Fingerprint Cards?
Yeah, I mean, we've made great progress. I announced it in Q4, and we immediately did a significant cost takeout exercise there. We've obviously recently announced in the portfolio refresh that not only are we moving investment away from mobile, but we are actually winding mobile down. And so really positive to see there. There's some more things coming on mobile shortly too. So really good to see both of those things happening. Obviously, the balance sheet is part of the rights issue that we're midway through at the moment. So again, some great changes in strengthening the balance sheet. Done a huge amount of work on strategy. The next thing we need to do is begin executing that. So again, that's something I've got my eye on for us to ensure that we're taking action around over the next quarter. And that also involves talent and how we're running the organization too. So I feel good about the progress we're making. I'm very, very impatient. And so I'm always pushing us to go faster, to go harder, to do more. But I feel good about the position we're in and the execution we've made so far in that transformation program.
Okay, but it will take the rest of the year, or how long?
Oh, yes.
Yeah.
Transformation doesn't happen overnight. I've done enough transformation to not over-promise and under-deliver. So you'll see cost come out of the business. You'll see the mobile revenue decline. You'll see profits increase. You'll see headcount move out of the company. So you'll see a number of indicators aligned with all of those elements of the transformation plan that will be playing out. They have started playing out. You're already seeing those indicators. Headcount is a good example. You're already seeing headcount coming down. Cost from headcount takes longer to come out. People have notice periods, etc. But you're seeing all of those indicators starting to play out, and you'll continue to see all of them play out over the next 6 months towards the end of the year.
Okay, thank you. One question regarding, I mean, what everyone I think is associate Fingerprint cards with the mobile technology, and you're winding it down. Are you selling anything, or are you keeping, I mean, patents and so on in your company?
Yeah, that is a really well-timed question. Literally, before we started this presentation, we've just announced a partnership with Aegis, who are based in Taiwan, in order to monetize our mobile capability. So there's a number of dimensions to that, including licensing and including NRE, where we're also co-developing with them. So that's a really interesting example. This very, very fresh off the plate in terms of how we're monetizing our mobile capability moving forward, an ongoing revenue stream there as well. So really nice to see that. And actually, I think that partnership is very, very powerful with Aegis. Two more agile, smaller, more innovative companies versus the slower volume big guys. Bringing that together, I think, is a really powerful partnership. So the answer is absolutely yes, and I'm very pleased that we've just announced that.
Yeah, okay. I mean, post mobile, what is your focus on what kind of businesses are you focusing on going forward? I know biometric cards is one, and so on. Could you elaborate a little bit about that?
Yeah, very much so. So I think, PC is obviously a really important aspect, some great margin opportunities there, a number of different partnership opportunities in future too. So I see PC as a core part of that. I think on the access side, the channel is a key opportunity to scale, because there are so many smaller organizations that can benefit from biometric access, physical access. So I see channel is the opportunity in access, plus logical access is the second element there. So I would split that in two. That's what I see the opportunity in access being. And still payment. I mean, payment's taking longer than anyone would like, but I don't think anyone's surprised by how long it's taken, because, banks are notoriously rigorous and conservative when it comes to deploying technology to their end consumers, because it has to operate at scale. It has to be easy to use because it's their brand, and the risks are high as they are financially related. So payments I still see as a market we're seeing real growth indicators happening in. I want to see more, but I think we're going to continue to see improvements and change in that market taking off. It's not going to happen overnight, though. Again, I'm not going to overpromise on payments. We will see that market take off, but it's going to take time. It requires piloting. It requires steadiness to start to see that happen. But we're very focused in that space also. And I mentioned also there are some adjacencies and some new areas that we'll go into. Also, we have great iris capability, and we see lots of opportunity for that. And we see some platform opportunities to ingest modalities and help customers be able to leverage them more easily as part of their IT stack.
Adam, I have a question also regarding PC, which is a strong business area for you. I mean, biometric solutions have been in the PCs for many, many years. Why is not the same thing happening to the PC business like your mobile? I mean, with margins going down and so on. How is the market different?
It's a really good question. That's something we ask ourselves, because we don't want to see the same thing happen there, which has happened in mobile. I would say that the dynamic is very different in PC. The cycles are very different. It's a much longer product cycle, so the products last for longer. But also the rigor around the testing is much greater in PC. I mentioned earlier, it's very hard to get in to PC vendors because the testing rigor is extremely high and extremely hard. So, you tend to stay in those clients for a lot longer because of that rigor. I would also say that the supply chain is different. So it's not just the customers, the supply chain is different. There's a very different margin profile in the supply chain. So the suppliers tend to make a higher margin, just as we make a higher margin as a part of that ecosystem. And therefore, it's not as subject to the volumes that you would see in mobile also. So there's some quite different dynamics. Here's what I would say, though. All technology commoditizes over time. The job of a technology company is to continue to solve new problems in new ways with their technology to continue to evolve. And so for us, it's about not standing still, but continuing to work even closer. Right, I mentioned focus. Because we're not distracted by the mobile business, we can really focus with these PC customers and with those customers in access and payment and spend more time with them. And so that allows us to listen to them, to share ideas with them, and to continue to stay ahead and innovate, to therefore avoid any commoditization.
Okay. Adam, time's running. We don't have any time for more questions. Thank you very much for your presentation.
My pleasure. Thank you.